So we thought we were going to get a strategic Bitcoin reserve, but we're actually doing stablecoins now. Switch up. Yes, that's right. President Trump is talking stables now. What do Bitcoiners do? Well, first of all, we have to actually understand stables. So Colin and I are going to talk about that this Bitcoin Season 2. Bitcoin Season 2 is brought to you by Arch Network, the platform building bridgeless apps on Bitcoin. More on Arch later on in the show. Let's kick it off.
It's an honor to speak with you about how the United States is going to dominate crypto and the next generation of financial technologies. And it's not going to be easy, but we're way ahead. Just 2 weeks ago, we hosted the first ever White House Digital Asset Summit, bringing together many of the world's top leaders in crypto for a conversation led by our White House AI and crypto czar, David Sachs, who's a fantastic and very brilliant guy. That same week, I signed an order creating the brand new strategic Bitcoin reserve and the U.S. digital asset stockpile, which will allow the federal government to maximize the value of its holdings instead of foolishly selling them for a fraction of their long-term value, which is exactly what Biden did. He got a fraction of their value. We're ending the last administration's regulatory war on crypto and Bitcoin, and that includes stopping the lawless Operation Choke Point 2.0. Operation Choke Point went beyond regulation, and I mean far beyond. It was a form of lawfare through government weaponization. Frankly, it was a disgrace. But as of January 20th, 2025, all of that is over. I've also called on Congress to pass landmark legislation creating simple, common sense rules for stablecoins and market structure. With the right legal framework, institutions large and small will be liberated to invest, innovate, and take part in one of the most exciting technological revolutions in modern history. It's so big, it's, I think, as big as you can get. Pioneers like you will be able to improve our banking and payment system and promote greater privacy, safety, security, and wealth for American consumers and businesses alike. You will unleash an explosion of economic growth, and with the dollar-backed stablecoins, you'll help expand the dominance of the U.S. dollar, and many, many years to come, it'll be at the top, and that's where we want to keep it. We only want to keep it at the top, always. I can already see that the energy and passion of the crypto community is the kind of spirit that built our country, and it is exciting to watch as you invent the future of finance. And right here, it's going to be right here in the USA, the good old USA. Together, we will make America the undisputed Bitcoin superpower and the crypto capital of the world. Thank you. Good luck. God bless America.
You heard it there first, folks. Stablecoins are the biggest development in crypto, as big as you can get.
As big as you can get.
And if you didn't know already, no, the revolution will not be televised. It will be tetherized. Everyone.
It will be pre-recorded and sent to your Blockworks Digital Asset Summit in a canned, speechwriter format. So
I didn't know that Trump was capable of that kind of brevity. That was 2 minutes and 40 seconds. I guess you're a little busier when you're the president than when you're campaigning. But his Bitcoin 2024 speech was about an hour, and it probably could have been a little tighter. You know, he was rambling there a few times, but.
I thought we were going to do Bitcoin. I thought this was just going to be the beginning of hyper Bitcoinization and the Bitcoin game theory. I thought the nation states were going to fall and the dominoes would begin to fall and play out. What's going on?
Well, Charlie, in the age of 2025, in this year of our Lord and Savior 2025, in the age of Trump's second presidency, you can have your cake and eat it too, apparently. He made good on his promise to not sell Bitcoin that the government currently holds with an executive order, thus establishing a reserve, if you want to call it that. People were surprised, by the way, that was what he meant. And that's literally what he said.
Is literally what he said. We talked about this on the show multiple times. We gave you the playbook. We wrote newsletters. We're like, this is probably what it's going to be.
And it's not going to be this.
Yeah.
And he also granted his Treasury and Commerce departments to look at other ways to accumulate Bitcoin for the stockpile. But So we have that, but we also have, shockingly, a sitting U.S. president wanting to maintain dollar dominance, and he wants to use crypto to do that. Now, to Charlie's point, if that seems anathema to you for what crypto is supposed to be used for, if that seems kind of oxymoronic and a contradictory goal, dear listener, you would be almost right. But what we're seeing right now is a schism in the original vision of Bitcoin as nation stateless money into a hybrid future, which I personally believe is the most likely, just given power structures, where you are going to have cryptocurrencies slowly embedded into the traditional financial landscape, and they are going to be used to prop up the very institutions that Bitcoin was meant to topple, while Bitcoin itself, for those who want to use it as a neutral currency, will be available. The vast majority of people, though, they will treat it as they already do, a la Bitcoin ETFs, as a sort of investment and savings vehicle. But the question, Charlie, is how do stablecoins actually help prop up the dollar?
Yeah, and we have referenced in a few times over the past half year, like this thesis that stablecoins are a way to extend the reach of the U.S. dollar, to empower it. Trump clearly sees this. Those around him clearly see this. It's funny because the game theory is like much more intuitive about how dollars become more powerful on top of crypto rails. We're seeing this in both in the data, how people use these, and then now we're seeing it explicitly from the top government official in the world. So we are going to break down how these things work, give a little bit of a history lesson, and then pull out some research from important, insightful folks across the ecosystem. But first of all, Colin, this chart, if you're not watching this, we will describe it to you. Tether is absolutely on the board alongside the other big countries of the world who buy treasuries.
This chart is crazy. And a quick prelude before we get into this. Stablecoins were originally devised as a payment rail for the burgeoning Bitcoin and crypto ecosystem that often had trouble securing bank accounts, right? Or had trouble being able to move money between exchanges or between businesses because banks did not like the idea that you were using this thing that ended up getting Ross Ulbricht convicted to nearly a life in prison. But he's out on parole. We covered that on a prior Bitcoin Season 2. Go check it out. That being said, Bitcoin had a lot of stigma back in the early days. So in 2014, the company Tether launched the USDT stablecoin on a protocol on top of Bitcoin called Omni, which is now kind of defunct. It's not really used for trading USDT anymore because there are other blockchain networks that we use for it today, like Tron and Ethereum. But it was originally used as an endogenous payment rail for the crypto ecosystem. It is now spilled over into a way to circulate dollars synthetically across borders in places like the global south. And the way that a stablecoin works is it is a token that is issued and stable, i.e. pegged 1-to-1 to the dollar. So 1 USDT on any given day equals $1, give or minus a few microcents, right? Now, the way that this works, a lot of people assume that this means that Tether has cash in their bank account. And they do have some cash, hard cash, but what they're also holding the majority of their holdings are in US Treasury bonds. As shown by this chart right here, this is from Paulo Ardino, the CEO of Tether, and iFinex, the parent company of Tether. Tether was the 7th largest buyer of US Treasuries in 2024 compared to other countries. To give you some context, that's 33.1 billion, which is just a hair shy of the United Kingdom and supersedes Canada, Taiwan, Mexico, Norway, Hong Kong, South Korea, Germany, and Saudi Arabia's U.S. Treasury allocations last year. It is behind the United Kingdom, Singapore, Belgium, Luxembourg, France, and the Cayman Islands. The last one's kind of funny. It's not the Cayman Islands specifically. It is financial institutions in the Cayman Islands that are acting as tax havens for certain privileged peoples. But so the big picture here that I wanted to use to zoom out before we zoom in on some of who are using stablecoins is as stablecoins have grown in demand, not just within the crypto ecosystem, but in emerging economies and areas of the global south with weak currencies, we've seen companies like Tether increase their demand for US Treasuries. And what does Tether do with these treasuries? Well, they're earning yield on them too, right? So it's a win-win. It's a way for them to have cash equivalents in their bank account to make sure that they can actually meet deposits if someone tries to withdraw cash from the Tether treasury. But they're also earning 4.5% currently on like $100 billion. I don't know the actual makeup, but as of Q4, according to Tether's transparency report, Tether holds $113 billion worth of treasuries.
Okay, let me do some math. 4% on $113 billion. That's over $4 billion per year.
Yeah. And if you look at Tether's profits, right? Tether is one of the most profitable crypto companies out there. Part of that is because they can just, maybe free ride's not the right word, but they can double dip here. They're basically a bank in a way, right? In the same way the bank takes deposits and they earn yield on them by loaning that money out. Tether is not loaning the money. Tether is, well, actually they are loaning the money because they're purchasing treasury bonds. So Tether is kind of just like a fully collateralized bank in a way.
And there's other stablecoin companies out there. There's other stablecoin issuers. Notably, there's USDC issued by Circle, which is kind of the US stablecoin. It's the most smiled upon by US institutions, but there's tons of these now, and they're big business. And there's kind of like different eras of stablecoins. Tether being like the OG one, it's basically the Kleenex of stablecoins. But you've got others, you've got stables which are not necessarily backed by US Treasuries that are held by a private entity that you can redeem Tethers for. You've got Athena, which uses some interesting financial instruments relating to Bitcoin yield, or rather Ethereum yield, and like taking a long short strategy. You've got attempts to do what's called a decentralized stablecoin like DAI, which takes a basket of these stables like USDT, USDC, and other, and tries to issue a stable on top of that. And the funny thing is, like, we've seen various attempts at this, and certain implementations and companies have been the most successful. Tether, obviously, but USDC also has kind of been a powerhouse. Athena seems pretty good. And you have new stuff like from the people who wrote the report that we're referencing a lot, Castle Island. They are one of the leads in kind of like a new type of stablecoin issued by Mountain, called the Mountain Protocol, which is kind of the investor's stablecoin. But there's a lot of these, and it's really just a simple. There's the primary implementation is just you got some treasuries and you issue a stablecoin on top of that, and then you can redeem the stablecoin for that, maybe with some strings attached.
Yeah, and just to piggyback on some of the stuff you're saying, so USDC is the second largest. It's operated by Circle. It's used on Coinbase as kind of the de facto stablecoin, or maybe even de jure. I don't know if they offer each other, but Circle on its product page says that it holds 20% of the stablecoin deposits in cash and then 80% in treasuries. So if you take Tether's 113, add that 48, add Circle's, Circle has a market cap of about 60 billion right now. It's another $48 billion worth of treasuries that are being held in these institutions. You're topping out at 163, $161 billion worth of treasuries being held in just those top two. That's $161 billion worth of treasury demand. The grand scheme of financial markets, that may seem like a small amount, but imagine a world where maybe that 10x's or even goes further, where stablecoins are the dominant form of commerce online and IRL for dollar purchases and sales. Then you have a dynamic where you are essentially creating a new demand for treasuries. And that's really what this is all about. It's not just about dollar. It's not about dollar dissemination and global South or third world markets. It's about the fact that these companies are buyers of treasuries at a time when the U.S. government is starting to shake at its knees a little bit about who's going to buy our debt. So
wait. So that sounds like all us Bitcoiners have been telling this tale that Bitcoin comes in and solves our debt crisis, and Bitcoin grows so much that the world becomes a utopia. But it actually sounds like, if I'm hearing you right, Colin, sounds like stables and are this new market, this new gray market and buyer of treasuries, so that we can actually fix our treasury and debt problem. Wow, stables sound really awesome. Why are we bothering with Bitcoin anyway?
That is the thinking with certain people, right? And I do think that before we dive into who's using these and why, I do think it's important to remember that ultimately, again, no surprise that a president is backing this. Anyone who's surprised that Trump's like, I want stablecoins to help prop up dollar dominance, there should be no surprise there. If you thought that he was only going to like Bitcoin, then I don't know what to tell you. But I would also say, as a good Bitcoiner who loves Bitcoin, the dollar losing currency dominance is a very bad thing for the American people at the end of the day. Now, obviously, there's a lot of financial engineering that the Fed is complicit with regards to our current financial landscape that is immiserating the middle class and the lower classes. And I'm not going to debate that. We can't just keep running up debt, and we can't just keep printing money and inflating away people's savings and their purchasing power. But a world where the dollar completely loses its relevance is very scary for the American people. And if you actually want to play hyper Bitcoinization forward, that creates a lot of social unrest and a lot of haves and have-nots between the people who actually own Bitcoin versus the ones who do not. And I'm not saying I have the answers for how to balance this out entirely, but a world where the dollar dies and Bitcoin ends up mooning, you just need to look at, that book, When Money Dies, that we've referenced. And you sent me that great passage a few years back that I've quoted on a few podcasts. When the Weimar Republic, when their Reichsmarks inflated post World War II or post World War I, in the 20s, it created vast social upheaval that eventually led to that furnished the field for an autocrat like Adolf Hitler to come to power. So I don't love the idea, obviously, of continuing the financial engineering and games that have led to a lot of our problems. That being said, I don't think that Bitcoiners truly appreciate that the dollar dying is going to be a very, very difficult thing for people to come to terms with. And it's going to be catastrophic for Americans as a whole.
Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid, and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users, so join me in trying out Arch while it's still early. But one maybe point of levity here is, Tether is this incredibly profitable company, and if it continues its current course, it'll only increase in its profitability. So what are they going to do with all that money, Colin? Well, of course, what do you do with, a cash-rich company? You
build an Eye of Sauron.
You build an eye of a tower of Orthanc, if you will, Saruman, or Kirith Ungol, if you will. Here it is, Paolo Arduino. You should come on the pod sometime. CEO of Tether, with a fun appearing AI mock-up of Tether Tower, which is the Tether Diamond logo, a building shaped like that. This Tether Tower is actually a real thing, which is going to be built, supposedly, 70 stories in nowhere else but El Salvador. Wait a second. El Salvador, isn't that the Bitcoin country? No, it is about to be the Tether country. So here we have a beautiful GIF of what that tower could look like, with its eye seeing all, scanning the horizon, making sure no one doesn't use Tether.
Just to kind of pull out a thread that we wove earlier, what you're really starting to see is that increasingly there's a contingent of Bitcoiners, crypto folks, and newcomers and supporters or allies like Trump that kind of see Bitcoin and stablecoins destinies as linked. It's almost like a Goku Vegeta thing, where, you know what I mean? Where it's like they actually hate each other, but then they become friends, but then they're always constantly fighting.
Yeah, like a Butch Cassidy and the Sundance Kid type deal.
Yeah, precisely. And that's really what we're kind of coming to terms with right now and grips with. And the question then becomes, what does that future actually look like? And potentially to answer that question, we could go and look at some of the data for who are using stablecoins currently.
Yeah, so let's break out the data. We're going to, there's some great resources, but like the definitive report on this recently is again from Castle Island. That'd be Nick Carter and Matt Walsh, who did a report, a part 2 report on stablecoins, stablecoin, the emerging
market story 2024, led by Castle Island Ventures. Also, Brevin Howard Digital and Artemis helped co-author this report. And Nick Carter and the team at Castle Island Ventures have been big supporters of stablecoins for some of the reasons we've talked about here, that they are extremely beneficial to the dollar system. So where do we want to start with this, Charlie? Because there are a lot of graphs.
Yeah, we can't dive too into it. I think one of the biggest questions, I think maybe the main purpose is to help the listener understand like who's using stablecoins. That being like the purpose of it, because there's a ton of data, there's a ton of great charts. I do like to say, just for you gave you showed the chart earlier on, the other stablecoins that weren't Tether. Here's Tether's share of overall stablecoin supply. It was the market up till 18 and 19. And then we saw USDC and others come out, including DAI, and Tether kind of declined until mid 22 when it was just under half the market. And it's increased since to about 70% of the market. So, this is funny because this actually kind of looks like the Bitcoin dominance chart, if you will, too.
Yeah, that's a good point. And Tether is indisputably the king. And to what Charlie was saying, or rather what I was saying earlier, it started out on Bitcoin. Now it's migrated to a bunch of different blockchains, from Tron to Ethereum to, I guess, Solana now as well. And a lot of the volume is on Tron because Tron's super cheap. And that's really important.
Maybe that's the next one, which is where are the stable coins being traded? And this chart here tells a good story because a lot of people might, the listener hasn't like looked at this data before, might be surprised. They'd be like, well, it's got to be on the most secure of the blockchains. But in fact, the people want fast and cheap payments. This is the reality. Yep. So,
and part of that is really, if you think about it, it's like that speaks to the two primary use cases, which is trading and also converting local currencies into stablecoin. So if you don't mind, Charlotte, I'm going to share one of the
you go for it.
Charts from this. So this is in a section where they talk about stablecoin use. And the first chart shows, what are your primary goals when using stablecoin? Select all that apply. This was a survey that they did as part of the report. 50% said to trade crypto or NFTs. 45 or 47% rather said save money in dollars. Another roughly 44% said obtain better currency conversion rates. And on it goes. Another also at about 37 says convert my local currency to dollars, and on and on and on. So what you're seeing there, again, going back to one of the things we touched on earlier, what started as a means to trade cryptocurrencies, which is still the dominant use case, has also evolved into a way for people to access dollar liquidity in countries with increasingly unstable currencies. The ones that come to mind, Venezuela, Argentina, other places like Nigeria, Turkey. All of these places have seen increasing stablecoin adoption. And this really is a radical idea. And I think this is where the bull case for stablecoins, or at least I should say the not so devilish case or the hopeful case for them, really shines through. There has never been an investment or rather a financial vehicle that is completely open to the lay person without the barrier of high transaction costs, high currency conversion rates, and other barriers to entry for a financial instrument, right? So just to give an idea, when I was first reporting on stablecoins back in like 2018 for Bitcoin Magazine, and Bitcoin was also in the conversation here too, but people want to have they want the stability, they don't want the volatility. I was speaking with a Venezuelan about why they haven't been adopting cryptocurrencies. You know, the Venezuelan bolivar has been one of the most hyperinflated currencies in recent memory. And not only is something like Western Union screwing them over for remittance payments for family members who live abroad, but they're also using a currency conversion rate set by the government that is not actually accurate compared to Forex rates. So they're losing money both on the transfer of dollars or other currencies into the bolivar. They're also losing on the currency conversion because the government is using a more favorable rate against those currencies instead of the actual conversion rate. So all that being said, there has never been a financial tool or asset like a stablecoin that basically lowers the cost of holding dollars for these populations to a minuscule cost, not to mention the fact that you don't have to have a bank account to use them, which is the other thing where you'd have to be in a privileged position beforehand to actually be able to access a American bank account to hold US dollars. So if we look at the non-crypto trading stablecoin use case, 70% of the respondents said they're using it to convert their local currency to a stablecoin. Another 40%, really impressive, said they paid for a good or service using stablecoins. This is nothing new. A lot of these economies dollarize already, and they use cash. Now in the digital age, they're starting to use cryptocurrencies in the form of stablecoins. Another roughly 40% said send or receive money to a relative in a different country via stablecoins. 30 said use stablecoins for my business. 22 said received or paid a salary in stablecoins. And then about 7 or 8, none of the above.
So another chart I think here to help contextualize things for the listener is like, okay, so like if we were to assess the entire crypto economy overall, all the Bitcoin transactions, all the Ethereum transactions, all the stablecoin transactions, like how big are these in terms of just overall settlement? So this other chart from this report is very, very helpful, showing that Bitcoin dominated the landscape, Bitcoin and Ethereum up through 2018. And in 2019, some stables started being, taking up 5-10% of the overall crypto settlement volume, all the transactions added together over the past, over the year. And this has grown year on year until this past year of 2024, when about midway through 2024, stablecoins comprised half of all settlement volume of all networks. So stablecoins it's like, if you were trying, let's say you did not care at all about like crypto at all, you are the president of the United States and you're like, what is this ecosystem? I'm trying to assess it neutrally. I don't feel strongly about Bitcoin or Ethereum or any of these other crypto assets. You look at this and you're like, oh, well, actually, stables settle twice as much as Bitcoin. Stables settle 2.5 times as much as Ethereum. Like that's the actual thing happening. And so like, I'm actually surprised we don't hear more. You know that one phrase we used to hear a lot back in the day, which is blockchain, not Bitcoin. I'm actually surprised we don't hear more like stables, not crypto.
Right.
Because like this, that actually appears to, if I were an investor who did not give a shit about it, freedom and sovereignty, I'd be like, wow, this is a huge opportunity. This is great for my country, which is the global reserve currency and petrodollar. And this is extending our reach and this solves all our problems. Like, what's not to love about these things? And so, this is huge business and economy and transaction volume. The other component is that a lot of Bitcoiners who don't look at other crypto networks may be surprised that the settlement volume is about 40% on Tron and about 40% on Ethereum. So Tron, which you may never have ever touched, stablecoins. Tron is like this giant backbone of like the entire crypto economy as a settlement, settlement and payment rails, which is just continues to crack me up because of its
because it's obviously totally centralized. But I think it goes back to, if you look at the two major use cases of stablecoins, both for trading and for currency conversion or holding dollars synthetically to hedge currency debasement or use it for day-to-day purchases, which goes hand in hand with that in some of these countries. In both cases, you really don't care about the decentralization that much, because in the trading case, you're sending money to and from an exchange. So centralization doesn't matter to you. You're already using a centralized counterparty to custody your funds to trade. You care about frequency. You care about being able to settle that payment immediately. You don't want to wait 10 minutes for a Bitcoin block to settle that currency. And in the other case as well, for these people who are using it for their day-to-day purchases, they also don't want to have to sit and wait around at the grocery store while they're paying, $10, $20 for their groceries for the day. They want to be able to just settle it immediately. And so it makes a lot of sense to me that Tron has picked up a lot of the slack here. That being said, I would never trust my life savings to Tron. I would never want to hold Tron, my Bitcoin holdings or other cryptocurrency holdings that I treat as a savings vehicle on this. But for everyday spending, it makes a lot of sense in these stablecoin environments, especially considering what you said. Either, number one, these people don't really care. They don't know what they're using in some cases. Like, they're not in the trenches with all of these kind of arguments about the merits of decentralization or these heuristics for what makes the perfect blockchain. They just want to be able to feed their families and make sure that their currency and their wages don't lose 20% in a week. And for traders, they just want to make money. So they're not worried about these things either.
Yeah. So, while American citizens might find inflation at its stated few percent per year, or occasional, high single digit per year, we might find that high. That's really low and pretty insignificant to like most of the world, whenever they consider the dollar alternative. So, hi, this is Charlie, and we at Blockspace are putting on OpNext, a technical scaling conference for Bitcoin. It's coming up here very soon, April 11th and 12th at the Strategy, formerly MicroStrategy HQ in Tysons, Virginia.
Join us on April 11th and 12th for talks and presentations from the likes of Jameson Lopp, Jeremy Rubin, James O'Byrne, John Attack, and many more on the most pressing questions for Bitcoin's future and technical development. Tickets go up in price on April 1st. We're going fast. Get them while they're cheap. And we hope to see y'all there in April.
Go to opnext.dev. That's opnext.dev to get tickets and learn more. I do want to try to drive this home maybe to a point, which is like that it's an important time to be a realist about the actual incentives and not to paint this fairy tale that somebody, discovers Bitcoin and they become enlightened and they begin to make the exact, series of decisions that Bitcoin, the Bitcoin mythos has created. But rather, most people are pretty neutral actors who don't care about Bitcoin. And their rational decision would probably be to be very pro existing fiat and which in the form of stable. So,
if you ask people, would you rather have a strong Bitcoin or a strong dollar, in the sense of which do you want to have best purchasing power? 9 times out of 10 Americans are going to say the strong dollar because that's what affects their day to day. I do think that this is there's a good point to highlight with regards to the way that Bitcoiners have inherited the kind of doomsday cultish mentality of gold bugs. And I don't want to be too harsh on it because I obviously
we love gold bugs. We've all got a little gold bug inside of us.
My dad is a gold and silver bug. I got a lot of rundowns when I was a kid about the Fed from him in the wake of the financial crisis in 2007 and 8. And at the end of the day, again, I'm not trying to be too hard. I lean towards this a little bit, but that entire movement, both the Austrian economic movement within gold and now in Bitcoin, is reacting to very real stresses in the financial landscape. And they are looking at what's happening with debt, and they're looking at the way in which financial markets operate and saying that a return to a sound money standard would be best. They're making an argument that it would be best for the economy and financial health of the country as a whole. That's an argument that you can make. But to your point about where the rubber meets the road with realism, that requires a certain political and economic persuasion that most Americans not only aren't inclined towards, they're not even thinking about those things.
And they might even disagree with those things if they actually thought of it. In fact, like there's an argument to be made that most people just won't ever adopt that view. Like MMT is a very alluring, like seductive view, which is we can create, the wealthy future that we wish.
Why buy the cow when you can print for free?
Yeah, why buy the cow when you can just squeeze a bunch of milk out?
And yeah, I think that's a good point too. And you can kind of scream all day about economic literacy and about, how subjective value doesn't actually, but how intrinsic value doesn't actually exist, and talk about how the laws of supply and demand rule everything, including purchasing power. But at the end of the day, you're not necessarily going to win people over that way. And Bitcoiners especially do have this dangerous tendency to where there are a lot of people in Bitcoin who are of a predisposed political and economic persuasion. And then the more they get into Bitcoin and the more they're reinforced by their decision with appreciation that they were right, they kind of veer towards zealousy. And that's why a lot of people describe it as a cult. And I can kind of sympathize with those things. But that's kind of like a long-winded way of just addressing that. Yeah, I think that Bitcoiners are really starting to have a good hard look about, well, in the game theory that we always like to talk about of Bitcoin adoption, what else would you expect to happen when Bitcoin is on the national stage, when there are Bitcoin ETFs, it's being slowly integrated into traditional financial systems and adopted as a legitimate asset class. And all of these other cryptocurrencies that are in its orbit are going to get sucked into that as well. And stablecoins are a part of that. And it's only in the U.S.'s best interest to have a strong policy for stablecoins because it will help the dollar. And so it's a completely rational decision.
So where do we go from here, Colin? Do we petition to the listener and say, you listener, we assume a lot about you. We assume that you're probably pro Bitcoin and you probably have some kind of Bitcoin light inside of you that you carry. And maybe I say to the listener, it's a very important time as we enter a new era, where Bitcoin is like our world is now kind of, we have these paths to power and the ears and decision making of powerful people, and it's not really, and then they fight us. We may not like have that exact stage happen in the path of like Bitcoin adoption. And then they fight us might be, and then they embrace you in with the hug of an enemy who can then leverage you for their gain. And so I would say like it's a very important time to be a realist about the actual incentives that exist, and maybe not the fairy tale or hypothetical incentives that exist. And this requires really understanding how the fiat system works and not putting into a narrow box of it is simply this thing the Fed prints. It's a complex, the internet is not just a series of tubes. It's a really complex thing. So is fiat. So I don't really know where to go beyond that with a petition to the listener to like go and research these things, because this is clearly where the puck is going, and we can either sit, and say, well, gosh darn it, why aren't we buying Bitcoin as a nation state, and perhaps more slyly understand probably what's actually happening, which is the furthering of the fiat system.
Yeah, and I would add to that too. Obviously, we all want to be idealistic, but at what point is idealism just fruitful in the sense of no one's going to listen to what you're saying? And also, the fact of the matter is with this, the alternative to the Trump administration saying we want to use stablecoins to make the dollar stronger and we're not going to be hostile towards crypto was, quite frankly, a democratic platform on crypto that was completely hostile and antithetical to any growth in any aspect of the industry. So maybe we all made a deal with the devil, but is that worse than Beelzebub? I don't know.
Maybe we just made a deal with one of the minor demons with
maybe that's a better way to put it. We made a deal with Beelzebub so we didn't have to make a deal with the devil, because the devil wasn't going to make a deal. He was just going to put us in encase us in ice and blow his wings on us for the remainder.
Yeah. We're no longer being held in the mouth of Satan alongside Judas and whoever, one of the Caesars. No, Brutus. Yeah. So we're no longer being held in Satan's mouth. We're more in the, I would say, the gluttonous, just that first level of hell, which is like not that bad. You're still being blown around or something. I'm not really sure which level of hell is which. But the allegory...
Maybe a way to extend it, we're in the vestibule. You're actually not in one of the circles of hell. You're just kind of waiting outside in the foyer. And
it's like the purgatory. Yeah.
All right. Now that we've had a tortured and anachronistic analogy with Dante's Inferno, is there anything else to cover, Charlie? I think that kind of gives a general high level.
No, I think to the listener, if you find this kind of stuff interesting, we welcome your feedback. This is one of those topics which Colin and I are probably going to stumble through over the next year as stablecoins become increasingly proliferated. Every time Trump says something of note about like what's happening in the like crypto world and some evolution of like tone from the executive branch, we will talk about it. We will try to talk about it from a Bitcoiner perspective, but frankly, this is a lot of stuff happening all at once. And so if you have any opinions, please reach out to us at BTCSZN2. And then Colin is As I Lay Hodling, and I am at CV Spears. Otherwise, Colin, I think we actually have one more thing to cover. And that's because we just received some very big news that Tether is actually...